It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, national underwriter for Old Capital. Joining me today, smartest guy in the room, Michael Becker.
Hey, Paul.
Michael, who owns over 5,200 doors in the Dallas-Fort Worth area, former banker, probably has, how many tenants do you think, Mike?
So we've done 5,200 units. I think we currently own about 3,600, so probably 2 a unit. So, over 7,000 people, I'm sure, live on our property.
That's why we call him the mayor of Beckerville. Your Honor, Michael Becker. So in the Ask Mike Monday today is the question that came up from Buddy. Buddy asks, what are the steps Michael Becker uses to prove his assumptions on the original pro forma when doing due diligence? Let me say that one more time. What are the steps that Michael Becker uses to prove his assumptions on the original pro forma when doing due diligence?
Yeah, I think that's actually a pretty good question. So let's kind of take a step back. So when we're looking at potential deals, you get a lot that kind of come across our desk. We do some basic high-level analysis, and if it looks good on the high level, we spend some more time on it. If it looks bad, we kind of throw in the trash pile and move on. And the ones that we look good, we'll do some certain level due diligence out of the start before we decide to issue an LOI and try to purchase a property. And then once we actually get the deal awarded to us, and we'll kind of take further steps, do due diligence during the due diligence period, or while we have an access agreement and negotiating the contract. Will take an immense amount of time to go further. So really there's a couple of components to the due diligence. And so things you want to look at are first, kind of the financial and economic side, as well as like the physical side. So when we put an initial pro forma together, we make a rent and income assumptions on what the rental rates could be going forward based off of subscribe to certain data services like CoStar, ALN. They do rental surveys, and we can kind of go look at what the competitor properties are charging, and then we kind of back into what our market rents and other income should be, as well as we make assumptions on what the expenses should be just based off our historical knowledge. So once we actually get the deal awarded to us and we're committed to go forward and do the deal, we certainly dive in a little bit deeper before we put our private placement out, our PPM out, and try to go raise some money. So what we do is we take the rent comps and that the information that we have off of ALN or CoStar that got the rent comp information, and then we'll go do like rental surveys in person. So we'll go like shop, send someone to go shop the actual apartment complexes and kind of take note of what they have on that apartment complex and how that compares to what we have on the subject property we're trying to buy, and make sure we're kind of apples to apples and that the rental rates that we were believing were in place to what they actually are quoting when we actually go physically to the property and survey them. So that's a good way to kind of verify that the rental rates are kind of more in line to what we think we can do, as well as we obviously, when we buy the property, we'll do a lease file audit as well. So we kind of also will audit what they historically said that their rental rates are. They give you a rent roll. They tell you that the rents on all these properties are a certain amount. We need to actually go through the lease files and make sure we match up the scheduled rent and the actual lease to what's on the rent roll. So we do kind of two components there. On the expense side, once we kind of put an initial budget together, we'll go through in great detail with the management company, and they'll do an independent budget from our budget. And then we ultimately kind of merge them together. So we're assuming that we can, do payroll on a property of this size for $1,100 a unit. And then they're telling me, no, it's actually a little bit more expensive because of X, Y, or Z. And we're actually going to be $1,150 a unit. We kind of really, merge the two numbers and put them together, make sure that we get our budget pretty tight. Two big things in the operating expenses are insurance. So we always make sure we get a good quote from our insurance agent and make sure that we put that in there as well. So, we obviously don't take the time to do that when we're just submitting LOIs, but we do that while we're in our due diligence period. And the other thing is we talk to our tax consultant typically and make sure that we get our tax consultant to come in and tell us what the property taxes should be going forward as well. So, we'll make some initial basic assessment. Typically 85% of the purchase price times the millage rate is usually kind of the standard default. And then we kind of fine tune it depending on the specific location, the specific county appraisal district that we're buying in. So those are some of the things that we do to make sure that we really kind of fine tune our initial pro forma to the final pro forma that we put together in our business plan and offer it out to our investors.
Now, you guys have a lot of apartment buildings. Do you guys have a website for every building you own, or does the management company have the website for every building you own?
Yeah, so the management company is in charge of our marketing of our property, which includes the website, but every property has its own website.
So what type of information is on the website, and how important it is for a property to have a website? Because I've seen recently a couple of properties that I've seen, they don't have websites.
Yeah, so that's a good target for a property to buy if they don't have a website. So that's a good rule. The other one, the two best properties I've ever purchased, these were 4 or 5 years ago. Literally had typewriters in the office with no computer. So that's another good sign that you're buying a property that's being mismanaged. But the web presence and the online reviews are increasingly more and more important the longer we go on to this business. When I first started buying properties, it was not that it wasn't important, but now it's becoming more and more and more critical. Back 20 years ago, you used to have the biggest sign with banners and balloons, and that's really how you market it. Now it's more strategic and it's online, and a lot of people will even rent a property virtually if they're not in the area, and then sign a lease and then move here from another part of the country, and then never with actually physically seeing it. So you need to make sure you have really good photos. A lot of the stuff we actually have like 3D tours of them where they get a special camera and then you can get in the property and zoom around, do a 360 view. So those are really cool. Make sure obviously locations, key stats about what's in and around the area. Most of the properties we have are on revenue management. So then they will then have, current pricing that feeds to our website on a daily basis by floor plan. So it has all that sort of information on the website. And the better your web presence, the better the SEO. It's becoming more and more critical to operate an apartment complex. But that's typically handled by the management company.
It's really amazing, with the advent of Amazon, people buy stuff without even talking with a salesperson these days. And I would imagine that what you're saying is that they actually rent apartment buildings without even talking with a manager or somebody on site. And they take that 3D view of the property that you guys have on your website and kind of figure out if it works for them. And they can do everything over the computer, over the phone, without even touching or talking with the person. Today people are being a little different these days with their buying habits. They don't want to have interaction with salespeople or marketing people. They just want to buy what they want to buy, almost everything online.
Yeah, so it's not fully there yet, but it's certainly going that path, and the human touch is getting lessened along the way in a lot of cases. Not all cases, but a lot of cases.
So if somebody wanted to get more information about what you do, what's the best way of getting a hold of you, Michael?
No, really the easiest way is just to go to our company's website, which is www.spiadvisor.com. That's SPI like spy, advisor.com. There's a contact us page, and you fill a form out. I'm always happy to have a 10 or 15-minute telephone call with people that listen to us on the podcast.
Now, when you say SPI, what does that really mean? Because I've heard that numerous times, and I don't even know. What does SPI stand for?
It's an acronym for Strategic Property Investment. So, SPI advisor, kind of like SPY.
I like strategic property management or investment management. I definitely like that. What else is going on in the old capital world these days?
Let's see. So we have coming up, we're going to schedule, and we'll announce here shortly the speaker. But on February 28th, we're targeting to have the first speaker series of 2018. But really the one like we want to highlight is going to be on March 28th, a month later. I'll be at the Grapevine Convention Center about 6:30 at night. We're going to have Dr. Mark Dotzauer, the former chief economist for Texas A&M Real Estate Center. If anyone's never heard Dr. Dotzauer speak, this is certainly a treat. It's going to be offered for free to anyone who listens to the podcast. So, that's certainly something that a lot of people pay, hundreds of dollars to go hear Dr. Dotzauer speak. So I certainly encourage you to come out, kind of talk about the state of the economy and state of, nationally as well as at Texas. He's a very entertaining, engaging speaker with a lot of good information. So I'd certainly recommend you come out to that on March 28th.
I would highlight that point is that you won't have to pay for Dr. Dotzauer.
Paul will.
But I will. But, and he's not cheap, but he's very good. And I definitely would want you to listen to it because it is just not a Texas economist. He's a national economist. And he may talk a little bit about Texas, but he does on the macroeconomics about what's going on with the economy, whether it's inflation or interest rates or what's going on commercial lending. He is a commercial real estate guy for as an economist. So fantastic. You definitely want to be there. Go to the Old Capital podcast, and we should have him up and running here certainly, so you can RSVP to go listen to him. So he's very good. Don't forget, if you do get back on the website, go to oldcapitalpodcast.com. Scroll through, see if you can go into the iTunes piece and give us a 5-star rating if you think that we provide good, valuable information concerning, apartment investing and real estate lending, just about what's going on. So 5-star results would be very much appreciative. We do appreciate that. So anything else, Michael?
That's it. Yeah, that and refer a friend. We're certainly trying to grow our listener base. So if you know anyone that would think this would be valuable information, please forward a link to our podcast. We definitely appreciate it.
We definitely do. We do appreciate you listening. Again, that's the smartest guy in the room, Michael Becker. I'm Paul Peebles. Have a good day.